Hello, ladies and gentlemen. Welcome to Why Your Startup's First Patent is an Investment and Not an Expense. Every founder loves to talk about their product, but mention patents and you feel the energy drop in the room. Patents are usually seen as boring, expensive paperwork, something that you'll get to later once you've raised a round. But here's the truth. If you wait too long to protect what you've built, you may never actually own it. Your startup's first patent isn't a legal formality, it's your first real investment. It's the foundation that gives the idea value, defensibility, and credibility. Over the next 20 minutes, I want to change how you think about IP, not just as a cost center, but as a growth strategy. First thing we're going to talk about, the startup psychology toward IP. Let's start with the mindset. When you're bootstrapping or pre-seed, every dollar counts. Cloud hosting, prototypes, marketing, patents are usually the last line item. Founders often tell me, we'll file later when we've generated some revenue. But later is dangerous. Because in today's first-to-file system, whoever files first wins, even if you built it first. Imagine spending a year refining your prototype, pitching it at conferences, posting demo videos, and then discovering that a competitor filed 6 weeks ago on something almost identical. It happens more often than you think. So instead of asking, can we afford to file a patent right now? The better question is, can we afford not to? All right, guys, next section. Patents are assets, not paperwork. Let's reframe what a patent really is. It's not just protection, it's property. It's intellectual real estate. Think of your patent portfolio as the land your company is built on. The more valuable the land, the stronger your foundation. Whenever investors perform due diligence, they're looking for assets, tangible or intangible, something that the company actually owns. Code can be rewritten, teams can change, but a granted patent is recorded ownership. It lives with the company, not the individuals. That's why patents are listed as assets on balance sheets and why in many acquisitions, IP represents 70 to 80% of the deal's value. So let me tell you a story. When Google bought Motorola Mobility for $12.5 billion, the phones weren't the main attraction. It was Motorola's 17,000 patent portfolio. The IP became Google's shield for Android. Even at the startup level, a single strong patent can transform your valuation because it gives investors something concrete, something that just can't walk out of the door. All right, let's talk about how patents build investor confidence. Let's look through your investor's lens. When you walk into a meeting, investors are quietly evaluating one thing: risk. They ask, how easy is it for competitors to copy this? If the startup scales, can someone else claim the same technology? What's the barrier to entry? Your patent answers those questions before they're even asked. Even a simple provisional patent filed bullet on your slide signals to investors we're serious, we're proactive, and we understand value creation. Let me tell you a story. One founder I worked with had a sensor technology for food freshness. They filed a provisional just before the pitch tour. When investors saw patent pending, the conversation shifted from can others replicate this to how big can this get? That psychology shift helped them close $750,000 in the pre-seed rounds. Investors fund people who de-risk. A patent is a de-risking tool. And remember, it's not about having 10 patents. It's about having one strategic patent that protects the core value of your company. All right, guys, let's talk a little bit about leverage beyond protection. Patents don't just shield you. They empower you. They give you leverage. Leverage in negotiation with investors, with partners, and acquirers. Leverage in partnerships. Companies are more open to collaboration when you bring protected IP to the table. Leverage in monetization. You can license, cross-license, or even sell patents to generate revenue. In fact, startups are increasingly using IP as collateral for loans. There's now a growing market for IP-backed financing, a sign that investors recognize patents as legitimate, tradable assets. Let me give you an example. A small energy technology company I advised licensed one of their patents to a larger corporation even before going commercial. That single license deal funded 2 years of runway and validated their valuation for Series A. Their innovation didn't just protect them, it paid for their growth. I'd like to talk to you a little bit about understanding ROI, cost versus return. Now let's talk about numbers, because every founder asks, how much will this cost? Here's a simple way to view it. A provisional filing might cost between $3,000 and $5,000. A full non-provisional filing may be between $10,000 and $15,000, depending on complexity. If that investment helps you raise capital faster, prevents copyrights, or increases your valuation even by a few percent, the ROI is enormous. Think of it like this. You wouldn't hesitate to pay $10,000 for a piece of equipment that produces $200,000 of product revenue. Your patent is the equipment that produces investor confidence. And the good news for you is you don't even have to do it all at once. Smart founders file provisionals early, then they expand and refine them as funding grows. It's like building your IP portfolio in phases aligned with your funding rounds. So start small, start smart, but start. I want to talk to you guys a little bit about real stories and the cost of delay. Listen, let me give you two contrasting stories, both real, both startups. Story number one, waiting too long. A robotic startup developed a groundbreaking motion control system. They wanted to wait until it was perfect before filing. They demoed the prototype at a tech expo, cameras, journalists, online coverage. Within months, a competitor filed a nearly identical patent application overseas. They spent over $100,000 trying to challenge it, and they still had to redesign. 2 years lost. Story number two, filing early and winning. Another startup in the AI imaging filed a quick provisional before coding was complete. That gave them the confidence to pitch openly. The provisional became a conversational starter with investors who love seeing patent pending on the deck. They raised $2.5 million in seed funding, expanded their claims, and today, that patent family underpins a multi-million-dollar business. Same level of innovation, different timing. Completely different outcomes. All right, I want to talk to you guys about the strategic founder's mindset. Here's a big mindset shift I want you to take away. Your IP strategy is your business strategy. Just like you track KPIs or customer acquisition costs, track your innovation pipeline. Ask your team regularly, what have we built that's unique? Have we documented it? Have we protected it? The best founders bake IP checkpoints into their product roadmap. Every prototype milestone triggers a patent review step before public demos or launches. That's how mature companies operate, and the earlier you adopt the principle, the faster investors will treat you like one. All right, next. Closing. Let's recap. Your first patent isn't a legal checkbox, it's your first asset. It builds trust with investors, it creates leverage in negotiations. It can even be a source of revenue. More importantly, it forces you to clarify what makes your innovation truly unique. And that clarity is the foundation of every successful pitch. So next time you look at a patent quote and think, we can't afford this right now, flip the question. Can we afford to let someone else own our idea? Because in the startup world, ideas are everywhere, but ownership is everything. Your first patent is an expense. It's the first investment in your company's future. If today's talk resonated with you and you're in the stage of deciding when and how to protect your IP, start small. File a provisional. Talk to a professional. Don't wait until the world sees your idea before you own it. Protect it early and let that patent become the foundation for your next round of growth.